Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. I'm joined with David Lukas here. Today is Monday, the 29th of September. So the end of the third quarter is upon us. Wondering if today is a little bit of window dressing as we approach the fourth quarter. There's a lot of expectations for this fourth quarter coming along. We're up for the year, and I wonder if we're going to maintain that momentum. Right now, the way I'm looking at prices and the character of the prices, it still looks pretty good. I don't think there's any reason to, you know, uh, be negative about this. Although the path that we get there, I think, is up for debate right now. What are you seeing out there, Dave?
Yeah, well, today I'm seeing gold skyrocket higher
Oh
again.
yeah, that's
So
true.
watching gold and crypto's going with it too. I don't know if that has anything to do with, I think I think on Polymarket, there's now a 75% chance that the government shuts down. So I don't know if that has a little bit to do with just that. And then if the government does shut down, they're not going to have jobs numbers this week. So you won't have that to worry about, it looks like. So, that movement's pretty interesting. Um, I've been saying it, and I'm going to continue to say it. I think we are in, even if you look at, if you're going to, like, people are comparing this to the dot-com bubble, right? Even if you look at where we are in relationship, if you put the charts together and did that stuff, we still have a parabolic move higher that is double the move that got us here left if we were going to follow the dot-com bubble, right? So I just think we are in a one of those situations where it's a uptrending market. We are, going to continue to grind higher, maybe short little pullback. I said it last week. Maybe, if you get a little, couple percent, it'd be short-lived. That's what we're seeing, that sort of thing. We'll see if October is, sometimes October's got some of the nasty things that has happened before in October. It needs a catalyst. I don't know what that is at this point in time. So we'd have to see what that is. But as of now, I just think despite any little pullback, even if it's 3 to 5% in October, you end the year higher. And I'm thinking SPX 7,000 is a pretty easy target by the end of the year.
Did you catch what Jerome Powell said last Tuesday about the market?
Uh, no, what did he say?
Well, he basically said that he thinks that stocks are a little bit overvalued. I don't remember the exact verbiage, and
No.
it was such an Alan Greenspan, parallel moment to, I think it was December of 1996, where
Yeah.
Alan Greenspan famously said, "Well, irrational exuberance,"
Right.
and it was
Right.
another
4 years.
three and a half
Yeah.
years before the market tapped out. And
Hmm.
finally, I mean, we did go through a pretty nasty correction in there in 1998, but
Yeah.
I mean, that could be like almost the 98 correction is very close to what we just went through earlier this year.
Well,
The,
we got a number of things that are just like there's $7 trillion in money market accounts. Fed's lowering rates. At some point, people are going to be like, I don't want to keep my money in money market anymore. I got to move it somewhere. I'm going to move it to the market. You see these moves in gold, this type of stuff that's happening, and it's like, gold's breaking out and stuff. It's actually not. Again, it's just the dollar's losing its value. Gold's now a tier one asset. For those that don't know, gold used to be a tier three asset. This spring, it was reclassified as a tier one asset, which puts it on the same level worldwide as like the dollar and like our bonds and all of that. So it now is like the equivalent, right, from a security, if you will. And so if you think about it, all these central banks around the world that were like either holding dollars or were purchasing US debt, they now have an alternative in gold. They can just hold that and it's the same thing now. And so it's no wonder gold's, going higher because I think you're seeing some of that. Well, we know we're seeing some of that being replaced with gold, right? And the U.S. has that kind of issue where we have to cycle really short-term bonds now, right? The long-term bonds, obviously are not, going to do it, be bought as much because the rates and stuff. So they're going to continue to auction shorter term. And so at some point that may change, but you saw the Fed cut rates, and the 10-year is basically where it was before that. It hasn't come down, right?
there's
Everybody's
an
like, oh,
incredible amount of rate stability. If
so
you go back the last 2 years, really, I
Yeah.
mean, everything, if you zoom out far enough, and get away from the daily chart, if you zoom out, there's an incredible amount of rate stability that we've seen.
Yeah.
So once we got past really the spike of 2023, it's been very stable. And that actually is good for the market in a way because of just the certainty that it brings. Like rates blowing up or, cratering is what
Mm-hmm.
brings the uncertainty to markets and what causes the problems with the carry trades.
Yeah, exactly. Well, the biggest thing now, guys, it's just that's reflected in like what you're seeing in part of it is that with gold, but part of it is also just the dollar losing its value too. That's the other piece of what you're seeing in assets. Assets go up not so much because they are worth so much more. It's just the dollar losing its value is showing up in those assets too. So, I think I was doing some research because we've got our mastermind in-person event, this coming, the end of this week here. And between 2015 and 2025, inflation cumulative inflation is 33%. So, $1 in 2015 is now worth 67 cents today. So it just kind of shows in the market. So, but man, there's a number of opportunities out there, number of things breaking out. You can look, I think we should do a top down on just the charts because we've got a daily chart that's charged up on the SPX. Can go either way, right? In fact, with the weekly chart being kind of at the lower end of the charge, actually going down would charge up the weekly chart. So that could set things up, pull back, charge up the weekly chart. All of a sudden, the weekly rallies into the end of the fourth quarter. So we could see that. So I'm kind of just waiting to see which way this thing releases.
Yeah. So what Dave said here, like the to me, what I'm looking at is a couple of different things. So the first thing I always ask is, what does the chart want? So what the chart wants right now, the trend is massively to the upside. So what we have to assume is that any pullback that we see is going to get pulled back up again. All right. Now, the other thing to keep in mind here is that the deepest pullback that we've seen from this entire rally has been 3.3%, which is extremely shallow. And that was at the end of July, extremely shallow. So markets can continue to grind higher like this. So what you got to watch for is a couple of things. Like this is where we get into the concept of like a Darvis box. What we'll do is we'll just box in the price and say, all right, market, we're not predicting the future. Just tell us which way that you intend to go. So if it breaks above 6,700, it's breaking the top of the box, then that tells you something. But this is also set up for a potential trap because everybody's thinking the same thing. Like, here's the pullback, let's go long. And they went long on Friday, and they're so far going long today. But if this ends up being a trap like this, then we could get really very quick price action to the downside. So 5% would be somewhere in this area here, just above 6,300. And I think that might do it. That would set us up for the rest of the year into the fourth quarter. So am I predicting a drop like that? No, but I think that there's going to be, I guess the best way to say it is I think there's going to be volatility in the month of October. So I think everything is on its best behavior as we finish out the quarter today and tomorrow. But then October 1 comes, October 2, into the end of the
Ironically,
week with the jobs.
October 1st is the day of the government shutdown.
Oh, well, good.
Wednesday, right? Wednesday, right?
Good. Let's have a
So,
party.
but I don't know. We'll see if how the market really reacts to that. I don't know if the market's going to care that much. Honestly, we'll just have to see what
I've gone
happens.
back and looked at all the other shutdowns, and it just doesn't. It's all about certainty right now. It's already priced into the market. The
Yeah.
market right now is already assuming that it's going to shut down, and yeah, there's going to be some. It's not that we're being heartless or anything like that. On an individual case basis, this can be devastating, but to the actual economy and to the market itself, there's a disconnect there. It doesn't care.
Pull up while you got the charts up. Pull up Tesla right now. It's another one I'm watching with a extremely charged daily chart, but an exhausted weekly chart.
Boy, isn't that the truth? Look at that. So this is, you're right. I mean, look at this. Every time it gets down to this level, whether it's to the upside or it's to the downside. This is kind of the limit of where things. And notice what happened here. It got down to this level, and then it went range expansion, went to range contraction. So this level, range expansion, went to range contraction. Now you can get lost in the candles here because it's easy to look at this in a rear view mirror because you're in the middle of this candle and it looks like the price will never go down again in its lifetime. But now we're into this area, and this may be an interesting. Overall, this looks like a big rounded base,
Yeah.
potentially setting up a handle
Yep.
here. So this could be a cup with handle pattern setting
Well,
up
it's
fairly
got
soon.
it's got plenty of energy on the monthly to continue long term. Maybe it may you may just see it flag out. It may just flag out here for a little while and charge up that weekly.
Yeah,
I'm just interested to see where this daily chart energy releases on this thing because those daily chart releases you can see some of them have some pretty big moves on this thing. So if this thing could go to 500 from here off
yeah.
that,
By the
or it
way,
could go.
guys, this is
You know,
if you want to, if you interested in chart patterns, this is an ascending triangle where the price comes up to equal
Mhm.
highs, equal highs, equal highs, but a series of higher lows along the way, and then the open end of the triangle forms the measured move. So if you measured this area here from about that's probably 280 up to 360, that is your extrapolation for the move. So it's just about there. It's just about there, and this does make sense with that. Let's look at your gold chart for a second.
yeah, look at gold today.
So look at GLD. Look at the month of September. So we had the same thing. Does this look familiar, guys? This is an ascending triangle pattern. When I was trying to get into investing, this is back in 2005, I made a series of flashcards. There's 25 flashcards, and I burned these into my brain. They were all the patterns like cup with handle, ascending triangle, these kind of things. And yeah, we've hit the target. So look at this. It's even worse now. This is not really, we have triple exhaustion. This is really not an area where you want to just start going long. You want to wait for some type of pullback or some type of reaction before you go long on this.
Yeah, the questions will be, will it flag out again like it did there, or do we get like some big pullback? So I'm actually thinking this is going to flag out more than anything.
Well,
Um,
when you get into exhaustion, there's three ways that the chart recharges. You can think of this as like, it's almost like a Mount Everest type of scenario where you go as hard as you can. Think about running up Mount Everest, and at some point you're just going to run out of gas, and you're going to stay at a base camp for a while. This is where, like as Dave says, the flag comes, where it consolidates for in the same area for a period of time. So think about like base camps on the way up. You stay at a base camp for a while, and you flag out, and you consolidate for that. But sometimes what happens is you get up to this level, and all of a sudden you lose it, and you fly down the mountain again, and you go back from where it came. And actually, this is the very fastest way to recharge a chart. And a lot of times we
mhm.
see something like this happen where we see that flame out, bounce off of the breakout area, and then take off again. So there's a number of ways that we see things.
Yeah, that
So
would become support
yep,
at that.
former resistance becomes new support. So we are not in the business of predicting the future, but we're trying to identify herd behavior based on the way that it operates. And there's a lot that you can learn about the behavior of the herd just based on the character of what you see the price doing. So while we're out there, guys, we'll be here for another few minutes. If you have any questions, if there's any charts you want
Yeah.
us to look at, um,
Throw coin up there. Speaking of ones that just are maybe starting to maybe catch a bid, check out coin. It's had a good a good level that it's been kind of basing out at, and it looks like it's turning around a little bit. I mean, all of crypto's up today, but you can see that nice kind of basing level that is put in there. It's kind of got a nice area of support. It's got a lot of charge. It's starting to turn, head back the other way. So I could see coin going on a run here.
Yeah, this actually would be if you wanted to. I mean, this would be a great area to sell either cash secured puts or credit spreads at like around
Hmm.
250 or just below the 200-day moving average because you've got this really nice value area here. You don't find support and resistance through candles and big moves like this, but what you do is you find support and resistance from consolidations. So the 250, 260 level, let's look at the options really quick and let's see what we'd get there. Just with a cash secured put really
You're gonna
quick.
get, yeah, depending on how far you want to go out, you're gonna pay decent.
So 250, you're going to get about 1% on a 250 put, which isn't bad. I mean, so
Mm.
if you got 25 grand, if you want to do absolutely nothing for the next 39 days, you're going to earn roughly 260 or thereabouts for your efforts, which is 1%, and you've only got an 8% chance of assignment on that. So selling at 250, you could actually go up to 270 if you wanted to, which is the top of that value area. And if
Hmm.
you did something like that, now you're talking almost a 2% return,
You
almost a
could also
2%
do it
return.
do it as a spread. If you want to do it as a spread, and your return's going to be higher.
Yeah, you could sell a vertical. This thing won't behave itself. Sell a
Hmm.
vertical at 270, 265, 270. Oh, let's see. I don't know. So you're risking about 430 to make $70. So you could figure out the reward to risk on that one. But
Because the
that is
return's a little bit better.
yeah, it's a fairly simple trade. Yeah, certainly better than 2%.
Hmm.
Um, but you do have to take a bit more risk in taking this trade.
Yeah. Yeah, if you're again, it's not as simple as just getting put the shares, right? If it comes down there, you're gonna, you know, have to manage it, deal with that type of stuff, right? So that's the difference between the trades. You could wheel this really easily though at like that 270 level.
So we're just kind of wandering around today, just aimlessly wandering around looking for direction. The market wants to fill this. Here's the pre-market gap, and that has been
Hmm.
filled. Actually, that's been
Hmm.
filled, so that's gone, and that's always a target where the market's looking to fill gaps because it has no other. On days like today where there's no leadership, it will just do whatever it can.
Check out crypto though. I mean, crypto's on fire today too, like gold.
Yeah, we're going to look at the IBIT and look at this beautiful flag pattern that is here. Now, everybody in crypto has been like losing their mind because of, and this is actually crazy to see. I'm going to go over here to actually Bitcoin, and I see this all the time. All right, so you're in this pattern. You're pulling back, you're coming up, you're consolidating. Where is the obvious breakout here? The obvious breakout, this is what everybody's looking for, was to the upside. And actually
Mhm.
what I ended up saying to my subscribers was I hope it doesn't go that way. I hope it actually goes lower first to wipe everybody out. And then it can pivot off of this higher low. And then
Mhm.
markets move because people are scared. Markets move because people are in pain. And so you can't just get markets to move just because the setup looks good or you want the price to go higher. So it's almost like this concept of one step back, two steps forward. You got to set up the trap, you got to set up the pain to get the market to move. And this is kind of the way that we look at everything now is through the lens of what would have to happen to this chart to screw the greatest number of people. And that is probably what's going to happen. So keep that in mind, guys, as we go through the month of October here, is that a lot of people are just like, hey, I read into the stock traders almanac, through the Hirsch brothers that the market by October 15th should be up X%, and a lot of people will do the same thing as that. A lot of people will
Yeah,
read
I
that.
think it's the opposite. I think the first 2 weeks of October is where the danger is, and then
Yeah,
after that is when you get, your steady run through the end of the year.
Yeah, so it's almost like we're set up for the next couple of weeks to for a little bit of chaos. And so
Hmm.
we've got some things happening. We got a jobs report coming up this Friday. We've got, you know, Trump over the weekend like put out a cartoon showing, you're fired to Powell,
Yeah.
which I think at this point now, I think the market's kind of come to grips with the fact that he's the short timer.
Well, they haven't come to grips because they don't know yet who the replacement is. That's where the market reaction will come when he announces the replacement.
But it will be
And
a
you
dove.
know,
It will be a dove. It doesn't matter,
mhm.
like which one it is because they're gonna, salute the flagpole, and they're gonna
Right.
they're gonna be supportive of cutting rates. Otherwise, they're not gonna get the job.
Well, and this whole the I think some of the reason that the gold and stuff is going higher too is ahead of this shutdown a little bit. The whole point of the shutdown is because they want to spend more. That's why, in this case, the Democrats are moving to shut down. They want to spend more. We're racking up, I think we're going to be well over 2 trillion deficit this year, right? So like the gold and everything's front running this stuff because they're going, okay, they resolve it and probably come to some agreement where we spend more, right? So it just keeps that snowball rolling further down the hills. It may be a little bit of front running on that. So same with crypto too. Crypto could be front running that a little bit.
So Dave and I have talked about this at length on a lot of these Monday sessions. But I there's there's a couple of things we both agree on, and that I ultimately we should finish this. This has been in a bull run since the end of 23. Really, the end of 22 is where the bear kind of bottomed out, and then through 2023 we started to run on the next bull market. So we've got a couple of years into this one, but typically they finish out with a flourish to get everybody on
Yeah.
board. And my sense is that we're not there yet with that. Not that
No.
we did with the one in 21, but what changed there fundamentally was rates were going to
Right.
rise, and that no bull was going to survive that.
That was a
So
major policy shift.
so
Now we've got a major policy shift back the other
back
way,
the other way,
right?
which could technically prolong this one for quite some time.
Yeah.
So so there's that. Remember that you know AI could be just as transformative as the internet was back in the late 90s. It could be the same thing. So we could be seeing some of these economies of scale. And it's going to be weird because people are not going to, it's going to be a hated bull market because you're going to see a lot of people
Mhm.
lose their jobs, but at the same time, earnings are
The
going to
market
be
keeps going up.
screaming higher. And so
Yep.
there's going to be this disparity once again where we see, and we've seen this again and again and again, where we see the investing class takes advantage of this. So once
Yep.
again, the bottom of the food chain gets left behind. So we're going to be seeing that again. So we're kind of we keep arriving at the same conclusion here that ultimately, probably this whole thing collapses into a mess, but we don't know when that's going to happen. Before it does, though, we'll probably
Mhm.
end up with much higher highs.
Parabolic. Yeah, it will be off the charts insane. Like everybody and their brother, like you don't have to know anything to make money in the stock market. Like when you start getting into that euphoria, where like everybody's making money, everybody's got a hot stock tip who's never traded before, you're the grocery store clerk is talking stocks with you while you're checking out. That type of environment. Once you start to notice that stuff, then get defensive. That's usually before it all collapses.
Well, here's a tip for you guys. If I start talking about going to a barber, then I would sell everything that you got because that means that I've lost my mind.
Yeah, the champagne corks are being popped on CNBC, all that fun stuff,
Right, right. Party
right?
favors, the
So.
kazoos, everything.
But I think for this week, guys, I mean, I told my students this. I'm gonna let this week over the next few days play out. I want to see where this daily chart releases on the S&P, and then kind of take advantage either way from there. I think once we get through, really this entire week, into early next week, we'll have a good sense of the short-term direction, that take us through about mid-month. And then, from there, I think overall we have a nice steady climb probably to that 7,000 level on S&P by the end of the year. That's how I kind of see things playing out. So a pullback would be healthy to do that. So,
Pullback will be good because if we see a pullback, we're definitely going to add some more long exposure with
mhm.
that. But I am not going to be adding long exposure unless we get at least 5%. Because what I've learned in the past is when we get into these crazy rallies that never seem to have any pullbacks, you tend to jump on the first thing that comes along, like, oh my God, we're down 2%, buy everything. And then this is where we get kind of rolled over because in the past, like not waiting long enough for something like that. But like, yeah, we're going to add some long exposure if we do get some chaos coming along. And it's
In
going to
the
feel
meantime,
weird. It's going to feel
yeah.
strange, but usually the best trades feel like that.
In the meantime, though, watch some of these the trending sectors, the trending sectors, right? So, I think quantum computing sectors, those obviously anything around the AI side and all of that. The watch I mean, the moving averages are really good. I always like the 20 period moving average on the weekly chart as a good level, right? If you'll notice if you look at a chart, even like what we're in now, that acts as a really good support level. And then if it breaks, then, you know, stay away from that one until it gets back above and resumes the trend again. And you can do that with most stocks and everything too. So that's always a good one for me. Cool.
Yeah, just I mean, like could just keep don't don't panic the next time you see a red candle. Like look at it as an opportunity. And if you are still holding something long, then just add some short deltas if you need to.
Yeah.
If you need to add something just to balance things out, this is where a nice covered call can give you a little bit of relief or something like that. And also, what I did this morning was to set up a short delta hedge. So implied volatility is cheap right now. So options are
Right.
cheap out of the money, but it's still expensive to buy a put. So I set up kind of these a wide out of the money spreads where I don't care if I lose on the trade, but I'd be kicking myself if we did have good serious haircut of 5% or so, and if we
Right.
didn't make something on the downside for that.
No, that's good. And that's just an asymmetric trade, like a 10 to 1 reward to
Oh
risk
yeah,
type trade, which is
yeah, and you
exactly what you want to do.
don't expect to win them, but when they're there, they're amazing, especially the way that the volatility unfolds with that. So, well,
Good
guys,
stuff.
looks like
Yeah.
we're good to go here. So, thanks for joining us, and we're going to have some volatility. We're going to have some movement by next Monday. So, we're looking forward to joining you guys next Monday after the jobs report comes out, after a new month
Mhm.
kicks in, and we're into the fourth quarter, believe it or not.
Yeah, we'll
So,
see if we have a good beat. We'll hopefully have a good beat on just the short-term direction. So
yeah,
we'll be able to
yeah,
like
hope
really
so.
talk about that. So,
Hope
yep.
so. Thanks, everybody. Have a good Monday, good week, and we'll see you next week.
Thanks, guys. Take care.
Bye now. All right, all right.